Good afternoon, everybody. This is Mark Lambert, the Theta Pendulum Trading Group. We're partners with Anthony Marino. I'm just going to spend a couple minutes giving some Elliott Wave count and also showing a little bit of Fibonacci projection on how to day trade the euro. Basically, I'm just going to keep it subjected to both the Elliott Wave and also the Fibonacci projections today. I'm going to kind of divert from it just a little bit, but I'm not going to get into vectors or anything like that, which I've covered that in other videos, but vectors is something you can pull every single day in the market. So now let's just get right down to it. I'm going to pull up Dynamic Trader with my daily trading bars. Apparently I had some errant ticks in here at one point in time, but I ended up fixing them, but it really posed no difference at all into the direction of the market at the time. I had lost some of these bars over here at one point or another, and for one reason or another, it still worked out the same anyways. The direction was the same. But anyways, I'm looking at this right now. It's also being a regular flat pattern that started back at this high, which was in July of 2008. Came down, we did a three-wave sequence to form wave A. We did another three-wave sequence right here would be A, B, C to form wave B, and then since then now we did another five-wave sequence, 1, 2, 3, 4, 5, which follows the expanded flat pattern, which is a 3-3-5 sequence. Very interesting in how it's unfolded since then. Okay, since then, now this is the June 2010 low, this area right here. We've moved up in a five-wave expanding diagonal, which would be wave 1, wave 2, wave 3, wave 4, and then wave 5. And we've done an ABC correction down to wave 2. And since then, we've pulled up into wave 1, wave 2, and I believe this is the top of wave 3. This right here was a five-wave sequence, an ABC three-wave pullback, and the subwaves of this right here was exactly 9 waves, which we were alert to the day that it happened. And we knew that we would be topping, and we did. At least personally myself, I thought it would meander down. I didn't think we'd have this sharp of a drop. But either way, it is what it is. That's just the way that the market unfolded. The thing is, we do not want to see the market go into the 1.3861 area, which was basically printed back on 2nd of February 2011. This area right here. What I'm seeing now, I believe, is probably a triangle, which would be a wave A, B, C, and I believe this is D, and I believe we're now forming E. I don't think E is complete yet. I think right now this thrust up that we had this morning is basically just a reaction. I believe it's got a little bit higher to go until it comes up forms a new low, but I'm expecting that new low to probably stay up above this level. If anything, at this point in time, I think I would throw on a trend line in these two levels. And we'll be looking at this area right here for support. Move this over a little bit. I will be looking for that area at this point in time for support. So let's get right down to the following hourly, 30-minute, and 15-minute charts. I'm going to show a couple things that show perfectly where the market would have bottomed today. Basically, these swings, this is a harmonic chart, the way I try to consider it, because they're all half of each other. They're all an octave off. This is an hourly, 30-minute, and 15-minute chart. A couple days ago, probably about 3 days ago, I actually flipped my fibs around. I'm still keeping this one on here because I don't think this move is done yet. But that could change at one point or another. But you can see that the market did move up to the 61.8 and so on, and just started moving up. And I also had an internal fib also that came up to a 127 also at this area, just this last wave up. But anyways, we moved this back down, and what I see here is 9 waves. And a person could very well see, which is one of the things that you like to do in Elliott wave, is count 5 waves inside of wave 3. The reason why I did not count 5 waves inside of wave 3 is I think it would be the wrong way to count it, because we don't know which wave extended at this point in time. And if anything, I would say it's wave 1. I'll tell you my reasoning why in a second. I count this as wave 1, wave 2, wave 3, wave 4, wave 5, wave 6, wave 7, wave 8, wave 9, which is a full impulsive structure. With that being said, right now as it is, when you take a look at the 15-minute time frame, which also coincides with this 30-minute, I see wave 1, wave 2, wave 3. We're in a sideways movement action right now. Wave 4, I believe we will move up to above this high for wave 5. And from there, then we might pull back in a few wave sequence to make another thrust up, which should stay lower than here. The nuance of why I really wouldn't want to consider this as a full wave 3, which it can be counted as. This would be a wave 1, wave 2 of a larger degree. Then you could say this would be wave 1, wave 2, wave 3, wave 4, wave 5. Uh, I don't like it just because the fact is, usually if you're looking at like a series of 1s and 2s, you never want to see the first wave inside of a wave 3 be longer than the first wave that's of 1 degree higher, which this would have to be. If this was wave 1, wave 2, then wave 3, then this would be wave 4 and 5. You would want to see this wave 1 be a smaller degree move than this one, which it wasn't. So that's why, especially in Forex, I like to count out 9 waves for a 5, 9, or a 13 wave move for an impulsive move. And one of the reasons why it did not hit on a fib today is, I know I've spoken about this on a couple of occasions on these other videos. I like to use the 360 degree, basically astrological chart, the chart of the zodiac. I divide that into 30-degree moves, which is 12 different divisions, and basically I use another tool to project 30-degree moves on the chart, which would be a 100% fib. I don't want to call them fibs because they're not fibs. It would be a 100, 200, 300, 400, 500 percent moves, and you can see that the market follows these more often than not. Just that not too many people are aware of them. What I do is I use my Fibonacci retracement tool, and I had it programmed basically to follow those harmonic ratios. What you need to do is you need to project this forward the same way that you would with a fib. This first wave, the first inflection that the market makes in an opposite direction, always gauges and measures both the timing and the pricing of where the market should go. So what we want to do now is I want to project this forward. This high right here ended up being 45.52. Okay, you're going to see this price move down to 45.52, 145.52. Once we're there, then I know I got to project it at the right height. Okay, so 145.50. I think I need to look at this correctly. Let me do this one more time. I want to snap to the high, snap to the low. Move this up 45. 52.9, 45.52, point something right there. Well, let's say this is close enough right there. But you can see that the market basically moved down right to this harmonic level today. It missed, I believe, by 1 tick. I'm going to anchor this a little bit better, just to illustrate exactly what I'm doing. I'm going to highlight this. I might have missed the bottom when I did this. Okay, there we go. There's the exact bottom. The exact top. 45.52. Let's go back here. And we'll see that the market basically bottomed exactly right on it. We took the measurement a little bit more precisely this time by zooming in on it. And you can see where the market bottomed today. It bottomed exactly right to that 400-degree harmonic. So that's just one of those levels that you need to keep in mind. And with this, just to kind of project what we think it's going to end up happening. This is the 9-wave sequence, which is impulsive. You can't have just one impulsive move that stands alone. So what we're looking for now is probably a 3 or a 7-wave pullback, which should form a lower high, and then this should move back down again. And what I'm hoping to see, I'd like to see it move back down to maybe this trend line, or at least stay above 38.61. If that's the case, I do believe the next move is going to thrust up higher. And with the thrust up higher, It would either have to be a large extended fifth wave because it's not going to give us a lot of room to do a fourth wave at this point in time. But either way, the general direction now for the next few days is going to be down. We're going to start watching this trend line and also this price level. Unless this whole analysis is wrong coming into here, which it really doesn't matter because it's been keeping us on the right side of the trade all the time, especially when we start concentrating on seeing what's happening on the hourlies and the half-hour charts and so on. But basically, that's what we're looking at for the euro. And I hope you find this useful, and you'll see how we do use these projections to find areas to get in and out of the market. This time it followed this harmonic ratio of 360 divided by 12 or 30-degree moves in price, and it bottomed perfectly right on that level. And I hope you find this useful. Everybody, Godspeed, God bless, and have a great weekend.